Hi, everyone. We are at the point of our group project where you get to start doing a little research on your companies, which I think is going to be a lot of fun. So before you get started, I wanted to show you just a couple things that I think may be helpful. Make sure before you start researching anything that you have checked Canvas and made sure that I approved all of your selections. So as I go through and grade them, I will be giving you comments saying, yes, that one looks good, or no, you may want to do something else. So make sure that you and I are agreed on what you're going to research before you invest time in research. I want to start with cash because every group should be looking at cash, and it's a little different because of where we find the information. Okay, so when we go to research cash, we have our statement of cash flows, and that is basically going to tell us exactly what happened with all of our cash. So that's how I'm going to research cash. So I'm going to go to my phase 4 example. These are the things that I submitted for phase 3 that I'm going to research. And I'm going to start with my decrease in cash. So I'm going to go to my Oracle financial statements and I'm going to go to my balance sheet, variance analysis, and I see that cash went down by 1.1 billion or 5.12%. So I'm going to just start by I'm going to start my write-up here, cash and cash equivalents, and I'm going to say cash and cash equivalents decreased by 1.1 billion or 5%. And you can see I'm doing some rounding, which is totally fine with our analysis. We're not looking for every penny. We're just looking for the big stuff. And I go back over to my financial statements, and now I'm going to look at my statement of cash flows. And we have not studied those yet. We will later, which is going to make some of this make a little more sense. But for now, we'll just go through it. So this tells me all the cash that I spent and all the cash that I received. So I'm going to start with, and we're only going to be looking at, scroll up here, 2019. I'm only looking at the most recent year. So I'm going to start by looking at my cash provided by, that's investing, gone too far, cash provided by operating activities. And my operating activities are just my day-to-day operations. So for Oracle, it would be revenue generated from selling software, support renewals, subscriptions, and then it's going to be offset by our regular expenses like paying our employees, paying rent, paying commissions, whatever else our expenses are. So I'm going to start keeping track. So right here, I'm going to just put here operating. So I know my cash provided by operating activities is $14.5 billion. All right. Now, my actual decrease is only $1 billion. So again, I'm not looking for the whole thing. I'm just looking to get close. But I can tell because my increase from operating was $14.5 billion that I'm probably going to have some big increases offset by some big decreases. And I think you'll find that in your cash statements of cash flows as well. So I'm just trying to basically look for the big stuff to explain what happened. All right, so next I'm going to look at my investing activities. Here's my investing activities, and I see some big numbers here where I made a bunch of money from selling marketable securities. Remember, marketable securities are the second thing on my balance sheet below cash. And my increases were partially decreased because I purchased some marketable securities. So I'm going to lump those all together. And I'm going to just add those together. Net, I made $28.5 billion from selling marketable securities. All right, so this is a lot of money I've got to offset because remember, my cash decreased, and so far all I see is increases. But here's a decrease for capital expenditures. Capital expenditures, that's going to be when we do things like we buy equipment, we buy buildings, we buy vehicles, computer equipment. In Oracle's case, a lot of that is probably investing in building out data centers, so a lot of servers and networking equipment. All right. So I think that's the big stuff there. Then I'm going to go down to my financing activities, where I'm expecting to see some big decreases. And my financing activities really have to do with stock and equity. All right, and right here I've got it. Repurchases of stock. So repurchase stock. And I spent 36 billion. And then I've also got these shares repurchased down here. So I'm just going to lump those in because this is all going to be purchases of stock. So I'm going to add in this 503 million. And what else did I have going on? I also issued common stock. So issued stock. And let's talk about both of those for a second. Usually when we repurchase stock, it's to make the outstanding stock more valuable. So if you think about it, if I own 10 shares and there's 100 outstanding, I own 10% of a company. If the company buys back 50 shares and I own 10, now I own 10 out of 50 outstanding shares and I own 20% of the company. So that's why a company would repurchase its own stock. But you're thinking like, why would they repurchase stock and then issue stock? Doesn't that defeat the purpose? Usually when we're repurchasing a bunch of stock, if we've also issued stock, it's because we've issued it as compensation to our employees. So if you think about it, my company could pay me $120,000 a year or in cash, or they can pay me $80,000 a year in cash and give me $40,000 worth of stock. And I'm still making $120,000 a year, but it's a lot less cash for employees or for the employer to have to pay out. So they've issued stock, and usually, if they've made money, it's because it's in the form of stock options. So employees are going to buy those, and we'll talk about those later. Okay, so what else do we have? We paid dividends, so let's include this. Paid dividends. And that was 2.9 billion. And then we also repaid loans for 4.5 billion. Okay, and that looks to be the big stuff. So let me just add that up and see where I end up. Oh, my repurchases of stock didn't add up correctly. So let me just fix that, because that's going to be the big one. All right. Now I ended up with a decrease of about $500 million. I was looking for 1.1 billion, but I think I've got the big ins and outs, so I'm going to call that close enough. So now what I'm going to do is I'm just going to copy this over to where I'm doing my write-up, and I'll delete it later, but I just want to have this at hand while I'm doing my write-up. So I'm just going to paste that in. All right. So now I'm going to take what I have here, what I've calculated for my write-up. So I'm going to say cash and cash equivalents decreased by 1.1 billion or 5%, primarily due to a 36.6 stock repurchase, as well as dividends of 2.9 billion. Loan repayments of 4.5 billion and capital expenditures. You can see I'm just listing where we spent money of 1.6 billion, partially offset by, so I just listed all the things we spent cash on, but we also made money, so that's my partially offset by. So my decrease was partially offset by operating cash flow of 14.5 billion, sales of marketable securities of 28.5 billion, and the B stands for billion, and stock issuances of 2.1 billion. Okay, so I've explained at this point the big things that caused my cash to change, and that's going to be good enough to explain cash. So if you have done cash, you may want to do something similar. I'm just going to get rid of this. Okay, and I will include this over on Canvas, so you can use it as an example. All right, so that's how I'm going to explain cash. In the next video, I'm going to start digging into the 10K and show you how we can look up some other items there. Okay, I'll see you then.